Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And hello, I'm Yatin, Mota.
Well, Yatin, after a wobbly start once again, we managed to recover pretty smartly. In fact, the index has now closed at 22,300, exactly where we closed yesterday. But, at the start of the day, we broke below that 22,200 mark just for a very brief period. But thankfully, we managed to recover lost ground and ended just about, flat as flat can be. But the recovery was more pronounced in the broader end of the markets. If you look at the Nifty mid and small cap indices, both of these indices saw a very sharp turnaround, with the mid-cap index gaining somewhere around 0.7%. Even India VIX, of course it was elevated, but holding up above that 17 level. But it wasn't as elevated as we've been witnessing over the last few days. Market breadth in favor of gainers, 1300 gainers to almost 950 declines. So good market breadth today, and sectorally autos, energy, metals, PSU banks, realty, these were all the sectors that were gaining in trade. On the flip side, IT, which was one of the outperformers yesterday, saw some bit of profit taking, and even banks, private banks, saw some bit of weakness. Of course, it was the weekly expiry for the Nifty Bank Index today. So ahead of that, in fact, on that particular day, we saw some bit of weakness coming in. But PSU banks have managed to snap out of losses. In terms of individual movers, Dr. Reddy's anemic set of numbers in the fourth quarter. US business saw some decline on a quarter-on-quarter basis. Reacting to that, top Nifty loser, Asian Paints ahead of numbers. Grasim, UltraTech Cement, HDFC Bank and SBI Life were some of the other losers. On the gaining end, you had BPCL. Crude has eased below $83 a barrel. So BPCL top Nifty gainer. Moto, good set of numbers, inline set of numbers, but management commentary was pretty good. So on the back of that, Moto among the top gainers. Tata Motors, Power Grade, which has been on a losing streak, among the gainers today, and Hindalco, Coal India and L&T as well, will be reporting numbers in a while. That was also buoyant ahead of earnings. But a lot of reactions, to results, and sharp ones at that, in the broader end of the markets. Yatin, Bharat Forge for one saw a 15% jump after numbers.
Absolutely, and Bharat Forge, I think the numbers were broadly in line with expectations, but I think the outlook for FY25 was strong, especially the defense business growth has been quite strong. Because of which I think the sales growth for FY25 should look stronger. In fact, if you look at the global aluminium forging business also, Bharat Forge expects improved profitability there, because of which the overall momentum was there in the stock, which ended up nearly 15% in trade. Hindalco, Century Textiles, Balaji Amines, all of these stocks doing well. In fact, Balaji Amines post the results today went up nearly 10%. What was not doing well is Sonata Software, post a profit decline of nearly 23%. Stock fell 15% in trade. Jindal saw some profit taking post earnings. Fluorochemicals, Sterlite Technologies, all of these stocks witnessing profit taking down by about 5% each. What is doing well is REC PFC. After the management clarification, REC in the conference call to analysts said that there will be limited impact of the RBI draft regulations, and since most of the loans that they disbursed are state government or central government guaranteed, provisioning would be to the minimal side. Stocks like Hindustan Zinc, Crompton, ABB, Siemens, Marico, Godrej Consumer, all of these stocks have hit fresh 52-week highs. In fact, Marico and Godrej Consumer, after a strong set of numbers, today also gained by 2% each.
All right, of course, FMCG counter seeing buying interest on the back of commentary on rural demand as well. But on that note, let's also talk about some of the stocks that are on our radar this afternoon, starting with Moto Corp. Yatin, the numbers were largely in line with estimates. Profit growth at almost 18.5%. Expectations were of 20%, but all in all, it was in line with what the street was expecting. Revenue growth was a slight beat, as it was 100 crore higher than what the expectations were throwing up. So 9,519 crore rupee worth of revenues in the fourth quarter. EBITDA up 25.5%, and margins also 14.3% vis-a-vis 13%. A good bump up compared to the same quarter last year. Expectations of 14.4%, so largely in line. Management has also given out positive commentary. They've said that they see multiple tailwinds for the company in the coming quarters, and FY24 launches, the new launches that they made in FY24 will be driving market share gains going forward. They've also outlined that they will be launching Zoom 125cc and Zoom 160cc in the first half of the current fiscal, and they'll be taking big strides in the EV segment while launches in the mid and affordable segments. and the management has said for the upcoming years they see a very good outlook for the company going forward. Since we were talking about FMCG and rural demand, rural demand has picked up when it comes to entry level motorcycle segment, and that's also aided numbers for Hero Moto, and the volume growth also, Yatin, in the quarter gone by was in excess of 10%. So all in all, it was a good quarter for Hero Moto. Also want to point out that if you compare it with its peers like Bajaj Auto and TVS, all of them have seen a very good run. In that sense, Hero Moto is the cheapest two-wheeler stock available, and that's why there is a lot of valuation headroom also when it comes to Hero Moto. So all in all, a smooth ride, and looks like here on we'll see the ride get smoother.
Yeah, and that's Hero MotoCorp, good commentary, especially for the coming quarters with new launches coming in. But it's a smooth ride for Hero MotoCorp, but all guns blazing for Bharat Forge with the defense orders that they have bagged recently. Now the fourth quarter results were in line, but the commentary was strong, because of which the stock rallied 15%. Earlier in the show we spoke about it, but let's talk about numbers. The India operations new orders have grown by nearly 1350 crores in FY24, which means the year-end order book has been strong. In fact, the defense business order book is now nearly 5,200 crores. Remember, a large portion of this order comes from the Taut gun artillery, which Bharat Forge has been developing for export markets. Now, the defense business overall order book and revenues have been 4 times FY23 versus the current level at FY24. So strong growth has been seen there in the defense segment. Now, Baba Kalyani in his results press release commented that FY25 consolidated performance will be driven by the defense business. Not only that, we have the turnaround of overseas business margins, especially with respect to the aluminium forging business, and overall FY25, according to the management, which is Baba Kalyani, he expects a strong profitable year versus FY24. And I think this commentary really buoyed up the stock, which was up nearly 17-18% once that presentation got uploaded. And by the time the conference call progressed, the stock went as high as 15% in intraday trade. So Nandita, good numbers and good outlook, I think, for FY25.
Yeah, as you rightly pointed out, all guns blazing, because the stock was actually in the red before the numbers, and even after the results. But once the commentary started coming in, we saw the stock shot up, and how a double-digit gains, 15% higher in today's session. But the other stock I want to talk about is Vodafone Idea. The stock has been in the limelight, especially with respect to its FPO and the fact that it has managed to raise funds via the FPO after much delay, right? And there is a very bullish report coming in from Citi on Vodafone, wherein the bull case scenario or bull case target is 100% higher than the current price of the stock, which is at 25 rupees per share. That's the kind of bull case target that Citi has outlined for Vodafone. Citi has said that stars are finally aligning for Vodafone Idea after the completion of the fundraise. Government backing is intact, and it shows the government's intent to keep this industry a 3-player industry. Citi has said that 20,000 crore rupees fundraise and the subsequent 25,000 crore rupee debt raise from the banks bodes well, because it gives the company the headroom to accelerate its network investments, to narrow gap with peers with respect to 4G coverage as well as 5G rollout, which, by the way, Vodafone has seen quite a lot of delay when it comes to 5G rollouts. But Citi has maintained its high risk rating due to the need for tariff hikes, subscriber retention as well as debt relief. The base case price target is 15 rupees per share. The assumptions include a 60% increase in ARPU over the next 4 years from FY24 to FY28, wherein it expects the ARPU to go from 143 rupees to 230 rupees due to 4G hikes of 15% each, one in the second quarter of FY25 and one in the third quarter of FY26. Stable revenue market share of 16% as well as potential government conversion of debt into equity are some of the other assumptions for this base case scenario target of 15 rupees. For the bull case scenario of 25 rupees, the key assumptions behind that is higher tariff hikes of somewhere around 20% each, taking FY28 ARPU to close to 250 rupees, and higher subscriber additions as well as decline in AGR or the debt to somewhere around 50%. of course, it does not expect any relief from AGR issues in the that is pending in the Supreme Court petition. But if you look at Vodafone, Yatin, the FPO shares also listed at a premium, and the stock has managed to snap out of a 4-day losing streak today. And of course, as I said, the bull case scenario is 100% rise from current level, which is somewhere around 25 rupees a share.
25 rupees, and I think the assumption for 25 rupees for Citi is that the AGR liability will halve because they have filed a curative petition in the Supreme Court. And you know, a 20-25% plus kind of tariff hike for the next 2 times, which is one in FY25 and one in FY26. So that's you know, quite possible given the fact that the company is hopeful that the tariff hikes as well as the AGR curative petition both could be in the company's favor. So let's see how really does that tariff hike promise or you know, expectation shape up for the entire telecom industry, including for Vodafone Idea.
All right, just want to point out that we are awaiting L&T's number as well, Yatin. Order book is expected to be healthy. Of course, we've seen quite a few order wins coming in from Saudi, which could bode well. Profit is expected to jump somewhere around 10%, while revenue is expected to see a 19% bump up. You know, let's see. But you know, margins have been a cause of worry for L&T, and analysts say that margin recovery could be at a slower pace. So let's see how things pan out. Numbers will be coming out any time after 4 p.m. I think. We'll of course be back with the analysis tomorrow morning on opening bell. So don't forget to tune in for that. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. But stay tuned to Money Control for all your other news and updates.